Next, we have the world's first regulated crypto bank, and they say that they are bracing for institutional money. This came out on April 21st. It says, less than half an hour's train ride from Zurich in the center of the picturesque town of Zug. I feel like I don't even know how you would pronounce this, but there's a centuries-old building with a frescoed facade. Golly. All right, Forbes. Usually, I'm going to look stupid today. They're going with all the stuff I can't pronounce. It's fine. Ancient timber ceilings and pastel window shutters. Oh, thanks for setting the setting there. All right. This former town hall would make a welcome stop for any tour group exploring Switzerland's rich architectural heritage. Yet everyone walking in and out of its imposing entrance is wearing formal attire. A futuristic logo sits atop the door. It reads Seba Bank. And a solitary symbol, the Bitcoin symbol, peers through the window to Zug's cobbled pavings. You might think that a steel and glass skyscraper would be a more fitting choice for the headquarters of Switzerland's first regulated crypto bank, but Seba's founder chose these premises for a reason. It was here in 2016 that Zug's local government became the first municipality in the world to accept taxes in Bitcoin. And the new tenants are no less determined to bridge the traditional economy with the new digital one. Pavi Rekkanen, something like that, Seba's chairwoman, is the kind of fintech leader that non-Nigerian investors. Look, I'm a computer guy, and my dyslexia, I just wanted to say something cool like nanites, or I don't know, something like that. Like Warren Buffett and Charlie Munger simply won't acknowledge the existence of. Steeped in banking experience, fiendishly clever, and convinced beyond any doubt that Bitcoin and blockchain technology are reshaping the global financial system. Quote, we are still, in my view, in the early days of this new industry, this digital asset universe, end quote. Rekkanen, who's held senior positions at Rolodex of technology and financial giants Nokia, Cisco, Credit Suisse and UBS, tells me in an interview in Seba's plush office. The institutional money and also the professional investors, they have woken up to the reality that market values have skyrocketed in DeFi, which stands for decentralized finance, and in NFTs, non-fungible tokens, and in cryptocurrencies. The data is beginning to show that this is happening. This is absolutely happening. And if you look at the size of institutional money bucket, we are just at the beginning. I think we are at the beginning of an entire industry. SEBA was founded in 2018 by Guido Buhler, Sebastian Marilot, and Guido Rudolphi, something like that. In 2019, it received a banking and securities dealer license from FINMA, the Swiss Financial Market Supervisory Authority, becoming the joint first regulated bank anywhere in the world to specialize solely in digital assets. The other licensee was Zurich-based Signum. More regulatory approvals have flowed in, including the right to provide institutional-grade digital asset custody to collective investment schemes, another first. German-speaking Zug was a natural choice for a base of operations, not just because of the local government's enthusiasm for Bitcoin, but also the growing number of blockchain companies that had set up shop in the small town. Widely dubbed the Crypto Valley of Switzerland, although other municipalities such as Italian-speaking Lugano and French-speaking Neuchâtel, something like that, are now giving it a run for its money. I just feel like we are not clicking on all cylinders today, guys. I apologize. The Ethereum Foundation, a non-profit organization that promotes the world's second largest cryptocurrency, was established in Zug in 2014. Today, about half of Switzerland's 1,000 or so crypto startups call the town home. Quote, "It was important for us to be in a location where we have access to talent," end quote, Rekkonen said. Quote, "You want to be somewhere the employees also want to be, somewhere with like-minded companies, institutions, associations, so that you can learn and grow. I think SIBA chose the right place to be," end quote. She adds, however, that for any new technology, quote, "when innovations are born, there's often also resistance," end quote. Cryptocurrencies in general, and Bitcoin in particular, continue to be perceived wrongly as Ponzi schemes and tools for money laundering by a sizable chunk of the global population. Many governments and regulators, albeit not Switzerland's, eye the sector with deep suspicion, fearing its potential to disrupt financial markets and intentionally laying down hurdles for investors. You know, I've been talking a lot about The Sovereign Individual a lot, which is a book that I've been listening to and paying attention to quite closely because it does seem to be kind of talking about all this. It's essentially about the transformation into the digital age from basically, I guess, postmodernism or modernism at this point, from the industrial age, and how time will move quickly. And some of the things that they point out is like one of the things would be that you would have essentially kind of the breaking down of borders. You would have the removal of giant nation states because they'll no longer be needed. They'll also have a harder time collecting taxes. And eventually, after a bunch of distress and so on, it'll end up being that, you know, the people will govern themselves in much smaller groups, kind of adhering to whatever those are. And one of the things that they talk about that I thought was interesting too, and it kind of alludes to what's going on with Elon Musk and Twitter, is they said that like individuals will be able to financially influence the world in general, and this move and this transformation through the digital age and fully into the digital age, because nation states won't be able to control them. You'll end up having basically individuals that make large purchases that are super influential. And it's kind of funny that a lot of that stuff that they talk about in the book is coming to fruition. And when we talk about, like, obviously the deep suspicion and the disruption of financial markets, we're also talking about the disruption of, you know, large nation states. And when I think about that from that perspective, you know, I go, wow, well, this book written in the 90s sure is like calling a lot of this stuff out. Why would, you know, there be deep suspicion and fear of this? Well, anytime there's a large change, there is fear surrounding it. One of the examples they used recently that I thought was super interesting was the Roman Empire and kind of the breakdown of the nation state of that, and basically how it setting it up, right? With the fall of Rome, you had basically a bunch of farmers. Agriculture was fantastic, that sort of thing, very profitable for a while. And then the state was kind of getting to a point to where it was, you know, needing to feed itself off the backs of all the workers that were surrounding it, the farmers and so on. And they were taking, you know, 30 to 40% of the crop yields as taxes. And it was basically making it to where the farmers weren't able to function anymore, to the point to where the farmers were just ditching their land and leaving it. What it ended up leading to, of course, was the Dark Ages. And what was interesting that I didn't know about the Dark Ages, and maybe they have it wrong too, but one of the things that they had stated in the book was essentially that while the Dark Ages, we had a time of like a lot of regression intellectually and so on, what it did do was empower the individuals. The farmers were able to go work that land because they knew how to work it, and kind of the money flowed back down to the bottom. And this is apparently something that happens in all transformations from different ages. So there is like positive light at the end of the tunnel, I suppose is what I'm trying to say, if you make those correlations. But so Rekkonen says you need to start thinking about how do you build trust with communities that you're serving, with the clients that you want to attract. The answer, according to Swiss politicians anyhow, is regulation. The country's federal council is its highest executive body, enacted 10 legislative amendments last year, updating the law to spell out how crypto assets should be handled by regulated entities when it comes to custodying, securitizing, complying with anti-money laundering rules, and more. Combined with the steady stream of licenses being issued by FINMA, this blanket ordinance gives legal certainty to the new class of institutional investors gingerly dipping their toes in the market. It means there is less time required to explain how we are doing this because they know that we are regulated in the same way. They know we all have the same AML, KYC requirements, Reckoning says, so it kind of shortens the discussion, and at the same time it helps us demystify the topic because we don't have to spend much time on the trust aspect, end quote. So big institutional investors are looking for things like this KYC and so on. KYC, know your customer, which means basically exchanges, banks that participate within cryptocurrency, etc., is going to gather user data for tax purposes and that sort of thing. It'll usually be sold to you under some sort of thing of preventing money laundering and crime and so on, and for your safety in case you need to get your money back or that sort of thing. Remember, the initial reason for Bitcoin was to remove the need for banks and governments. So it's kind of funny to see this. And I think that, once again, if we go back to the sovereign individual, it does talk about this kind of thing where they're going to take this new technology and try to fit it into industrialism. They're going to try to fit it in. They're going to try to force it in. And no matter how hard they try, at the end of the day, it's not going to work. So we're going to see a lot of this stuff. What happens when all the institutional money starts dumping into it? Well, of course, it pumps the price up, and then the individuals kind of get a benefit out of there. This goes back to the idea of Bitcoin as a Trojan horse. And so what do I mean by the Trojan horse? Obviously, you would be familiar with the Trojan horse. It's a way to, take down a city with large walls by hiding people inside and presenting it as a gift. Bitcoin is the Trojan horse to the institutions. You're going in here, they're saying, oh, there's a ton of money in here. As soon as they start dumping money into it, they're automatically giving power back to the individual. This is the path that is going to be taken. And it's going to be a very, very bumpy road. And I think things are going to get a lot worse before they get a lot better. But this is the road that we're on. SEBA, like any financial services provider, doesn't publicize details about its clients. Reckoning will only say that most of them can be classified as, quote, early adopters in the space. They include crypto companies that need corporate accounts to bridge their fiat and digital holdings, miners, founders, and early team members of successful crypto projects, and high net worth individuals with a background in professional investing. But the bank's biggest clients in terms of assets held anyway are already financial institutions. Who is institutional money? It could be a big bank, and the money behind it is their clients. Those clients are beginning to ask, is this an asset class you participate in? You recognize, you advise on. If the answer is no, 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 then they'll say, well, where can I go? Quote, so the institutions are beginning to get that pushback. Once again, why are they getting the pushback? They're getting the pushback because their clients, the people, are interested in this new asset class. They will be forced into it whether or not they like it. On the face of it, they don't like it. But because of the way the markets will dictate, they have no choice but to participate within it. It's fascinating, guys. We're watching history being written right now. It's incredible. If you're a big institution or even small institution, you have to ask yourself the question, am I going to invest in the infrastructure myself? Am I going to build my own custody solution and interact with all the crypto layers and protocols and processes that come with it on top of my own infrastructure? Or am I going to look for a partner? The best antidote for anxiety about the crypto sphere, Reckoning strongly implies without saying it, is having a reputable partner to hold your hand. And if you're going to do that, then a Swiss banking license is seen as a, quote, rare stamp of approval, end quote. SEBA has a broad spectrum of products tailored to the needs of its individual and corporate clients. On the simpler end, its trading platform allows users to hold and hedge 14 cryptocurrencies, of which you have Bitcoin, Ethereum, Polkadot, Litecoin, XTZ, I don't remember what that one is, Cardano, XLM, USDC, BCH, SNX, UNI, Uniswap, basically, YFI, and Link, Chainlink, and Aave. In addition to 8 fiat balances and the SEBA Golden Token, or Gold Token, a digital token backed by physical Swiss gold. It also offers diversified index trackers such as SEBA X, Exchange Traded Product, ETP. The bank's research department continually assesses tokens for inclusion in its flagship index, which comprises a basket of 7 cryptocurrencies weighted heavily in favor of Bitcoin, 40%, and Ethereum at 21%. Holdings are rebalanced on a monthly basis according to a rule-based smart beta methodology. Clients can also compile their own basket of crypto assets using discretionary mandates and actively managed certificates, AMCs. The latter available in white label wrappers, allowing B2B clients to develop a bespoke, regulated crypto investment product for end customers without jumping through all the hoops needed to bring it to market. In an era of historically low, and in Switzerland, negative interest rates, the ability to generate a yield by holding cryptocurrencies is particularly alluring. The bank caters for this segment with its SEBA Earn platform, which allows clients to stake 3 proof-of-stake coins, Polkadot, Tezos, okay, that's the one it was, and Cardano, and will soon enable lending of proof-of-work Bitcoin and Ethereum. Staking is a process whereby coins are locked up on a blockchain, albeit without leaving their digital wallets, in order to facilitate the running of the network. Institutional investors are interested in a couple things. What are they? They're a managerial class. Managerial class means that typically they manage things without the actual physical skills needed to perform any sort of valued work or contribution to society. Their contribution to society is telling everybody else what to do. And so what do they like to do? Why is proof of stake so appealing to them? Well, proof of stake is so appealing to them because all it requires is an investment. It requires taking something that they are traditionally comfortable with taking control of through the means of some sort of currency, in this case fiat, and dumping it into basically a coin that they can do nothing with but just give people the money to go ahead and earn extra money on it. This is a preferred method for managerial classes and something that you will see leaned on very heavily by banks, nation states, and traditional institutions, because these are the ones that allow them to maintain control over the global macroeconomics. And that is basically how that's going to play out. That's why proof of stake is going to be pushed by a majority of anybody that is participating within institutions like this. These services only scratch the surface of what's possible in the DeFi realm, but as Reckonen explains, the bank is treading carefully when it comes to protocols and smart contracts that push Switzerland's regulators to the limits of their oversight capabilities. Quote, DeFi in a regulated environment is still quite new, and we have very clearly taken the position that we're going to be in the permissioned DeFi space, end quote, she says, referring to protocols such as Aave Arc, which use Know Your Business, KYB checks, to ensure that all the participants of a liquidity pool are identified and approved. Quote, we actually have some really interesting DeFi projects coming up, but I cannot yet talk about them. Again, we see the demand from institutions. They are saying, look, I want to understand this, I want to be in this, but going for an open DeFi protocol is just a no for a big institution. Of course it is. Of course it's a no. In February, SEBA opened its first overseas office in the Gulf Emirate of Abu Dhabi, another crypto-friendly regulatory environment. The bank has also appointed a chief executive for Asia based in Hong Kong and now has clients in 24 countries spread across 5 continents. As you would expect for a Swiss financier, Reckonen is treating international expansion as a top priority. Quote, we started here in Zug and it'll be the place to be, end quote, she says. But we also need to grow outside. We never envisioned that we would be just a local player. From the beginning, we really believed in this being a global industry. That's the philosophy of Bitcoin and blockchain. No. I mean, obviously it'll be global. Yes, that's correct. But no. Not in this way. Growth of the roughly 100-strong workforce could take many forms. SEBA doesn't rule out acquisitions, and it has the cash to make them. Thanks to a 110 million Swiss franc, 116 million US dollars fundraising in January. But for an industry as dynamic as cryptocurrency, reckoning is quite rightly focused on the near term. Quote, we are a fast-growing startup, but we're still a startup, end quote, she concludes. Quote, so we have to make choices and we have to be clear on our focus areas and our strategy. Where SEBA and the entire industry is in 10 years' time, I don't even dare to comment on that. I think for now we have our focus. What's really important for an organization like ours is that when we build our capabilities, we build them with the mindset of scale and the mindset of replicable models, end quote. All right, so there you go. What do we got? Big institutional money coming into the market because of the demand of their customers. This is going to continue to happen pretty much everywhere because people do not like missing out on big opportunities like this. This is not too dissimilar, of course, from the boom of the internet and all of the tech stocks. Will there be a similar crash? Potentially. Will it affect Bitcoin like it affects all the rest of the cryptocurrency technologies? Probably not. I think we're going to start seeing a clear separation of oil and water between Bitcoin and everything else. I hope you enjoyed this clip from the Crypto Mining Morning Show every Monday through Friday, 7:45 a.m. Pacific and 10:45 a.m. Eastern Time. You can check out more clips here, or if you're interested in checking out the entire live show, you can check that out down here. Thanks for watching, and I'll see you next Tuesday.